Hello everyone. Welcome to this complete beginner guide to trading. If you want to start trading but don't know where to begin, this video will give you a clear step-by-step roadmap to understand everything from the basics to advanced concepts. In this video, we will first understand what trading actually is and how traders make profit from price movements. Then we will explore the different types of financial markets, including stock market, Forex market, and cryptocurrency market, so you can understand how each market works. After that, we will discuss how to choose the right market based on your goals and trading style. Next, we will explain the broker concept, how brokers connect you to the market, and why choosing a reliable broker is important. We will also understand trading platforms and how traders use them to analyze charts and execute trades. Then we will move to important market concepts like liquidity, support and resistance, and market trends, which help traders understand price movement. You will also learn how to build a proper trading strategy with clear rules for entry and exit. Finally, we will discuss risk management, so make sure you watch this video till the end, because by the end of this guide, you will have a clear understanding of how trading works and how to start your trading journey the right way. Many beginners want to start trading, but they feel confused when they see so many charts, strategies, and information everywhere. Without a clear roadmap, most people lose money because they jump into trading without understanding the basics. In this video, I will show you a complete step-by-step guide to start trading the right way, from learning the basics to building a strategy and finally trading with confidence. Let's begin. Trading simply means buying and selling financial assets to make profit from price movements. When the price of an asset goes up, traders make profit. When price moves against them, they face losses. The goal of trading is simple: buy at a lower price and sell at a higher price. But trading is not gambling. It is a skill and a business that requires knowledge, discipline, and risk management. Professional traders follow systems and rules. They don't depend on luck. Before starting trading, you must understand different financial markets. There are three major markets beginners usually choose from. First is the stock market. Here, you buy and sell shares of companies. Stock markets usually move slower and represent ownership in businesses. Second is the cryptocurrency market. Crypto markets are highly volatile, meaning prices move very fast. This creates both high risk and high opportunity. Third is the Forex market. Forex is the global currency market where traders buy and sell currencies. It is the largest financial market in the world with high liquidity and many trading opportunities. As a beginner, you should understand each market and choose the one that suits you. One of the biggest mistakes beginners make is trying to trade everything at once. You should focus on only one market in the beginning. When you focus on one market, you understand its behavior better, learn faster, and build stronger strategies. Focus creates mastery. To start trading, you need a broker. A broker is a middleman that connects you to the financial market. When you place a trade, the broker executes that order. You deposit your money with the broker, and they provide access to the market. Choosing the right broker is extremely important. A bad broker can charge high fees or even create withdrawal problems. Always choose a trusted and secure broker after proper research. Your capital safety depends on this decision. A trading platform is the software you use to analyze charts and place trades. Through the platform, you can buy or sell assets, study price movements, and apply technical tools. Most brokers provide trading platforms with charts and indicators. Popular platforms include software like MetaTrader 5 and similar systems. Before trading real money, you must learn how to use your platform properly. Understanding the platform. To understand market movement, you must understand liquidity. Liquidity represents areas where large amounts of money exist in the market. Price usually moves toward areas where many orders are placed. Large institutions and big traders create strong market moves because of their large orders. Understanding liquidity helps traders predict market direction more effectively. Price moves where money exists. Support and resistance are basic market concepts. Support is a price level where the market stops falling and moves upward. Resistance is a level where price stops rising and moves downward. When resistance breaks, price often moves strongly upward. These levels help traders find entry and exit opportunities. Markets move in trends. An uptrend means price is making higher highs and higher lows. A downtrend means price is making lower highs and lower lows. Sometimes markets move sideways without clear direction. Understanding trend direction helps traders trade with the market instead of against it. Charts often form patterns that help traders understand future price movement. Common patterns include triangles, breakouts, and reversal structures. These patterns show market behavior and help traders make decisions. However, patterns should always be used with proper strategy and risk management. A successful trader always follows a trading strategy. A strategy includes clear entry rules, exit rules, and trading conditions. It defines when to enter a trade, when to exit, and how much risk to take. A good strategy also defines the time you trade and the asset you focus on. Without rules, trading becomes gambling. Discipline in following a plan is the key to consistency. Risk management is the most important part of trading. The goal is not just making profit, it is protecting your capital. Traders use stop-loss to control potential losses. They risk only a small percentage of their account on each trade. Small, controlled losses keep traders safe, while large losses destroy accounts. Always protect your money first. Before using any strategy in real trading, it must be tested. Backtesting means testing your strategy on past market data. This helps you understand win rate, performance, and reliability. If a strategy does not work in testing, it should not be used with real money. Testing builds confidence and improves results. No strategy is perfect at the beginning. Traders review losing trades and find mistakes. They improve their rules and optimize their system. Continuous improvement leads to long-term success. Before trading real money, beginners should use a demo account. A demo account allows you to practice trading using virtual funds. It helps you understand the platform and apply your strategy safely. Practice builds confidence and experience without financial risk. Always practice first. After learning and practicing, you can begin live trading. Start with small trades and manage emotions carefully. Real trading involves psychological pressure, so patience and discipline are essential. Grow slowly and consistently. Let's summarize the complete trading journey. First, learn the basics. Then, choose your market and broker. Build a strategy. Test your system. Practice using a demo account. And finally, start live trading with discipline. Trading success comes from consistency, patience, and continuous learning. Stay disciplined, manage risk, and focus on long-term growth.